Welcome, folks. Tommy O'Brien coming to you live from TFNN. We kick things off just after 3 p.m. Eastern Time. Coming into Wednesday trading, and boy, we got a market right now. Reversal. Coming off that 6,000 price point, you have the S&Ps right now, negative by 95 points. We zoom in on the 5-minute, and we are making session lows as I speak. 58.64, down 1.6% on the S&Ps. NASDAQ 100, all of this ensuing at about 1 p.m. Eastern Time. Demand was light for a 20-year auction. Fear in this market right now. The deficit, the debt, it's adding up. You had Moody's out there with a revision. We're going to talk to Sean Edwards from Direction coming up at the after the first break. We'll talk a little bit of that action. On the heels of that, a lagging indicator, Moody's. But boy, how about these yields? We have Congress. We have the Speaker of the House making the push to get that tax cut done and through the House and over to the Senate. And at the same time, we have yields spiking and we have the market pulling back. And yeah, we're at session lows. NASDAQ 100 off about 1.5% right now. You have the Dow off 1.9%. UNH not helping that, down 5.2% as they have more noise, more news out there. But you get the Dow off 1.9 and oof, look at the Russell, almost off 3%, off 58 points. 2051. Crude. You see the spike last night in crude on the news that Israel potentially going to strike Iran's nuclear facilities. So much for a pop. Boom, just like that. We're down on crude with a 61 handle at 61.46. Now let's jump to yields. We'll start off with the 10-year. The 10-year. And let's start off with the yield curve. Why not? Okay, we just covered it in the 3 o'clock update, but the 10-year right now, we're pushing 4.6, folks. 4.59, the yield on the 10-year. We're up 11 basis points. The 30-year, one of the biggest stories out there, 5.09. The auction was for 20 years. Okay, demand was light. The 20-year, yeah, up 13 basis points. Now, the 20-year, okay, isn't exactly an auction that is always very heavily participated in. You know, and I'm not showing up at those auctions, but that is the consensus. Nonetheless, it was lackluster, and in light of the yields, in light of yields dominating that conversation, yeah, quite the day. We got the 10-year right now pushing 4.6. That's your 10-year. Okay, you take a look at the 30-year on the ZB, and I mean, you look at some of these moves, right? You talk about price destruction. How about from where we were anywhere back here in terms of 117 down to 110, right? You look at something like the TLT, okay, the iShares 20-year plus ETF, you're talking about destruction from 100 down to 83 in these markets. Remarkable on the long term as yields are spiking. We're at 5.1%. And look at these markets picking up steam, man. Now, we talk about the S&Ps. We talk a little bit of price and volume, okay? We've been talking about this on the program. You know, you follow technicals, folks, you follow fundamentals, but man, you talk about hitting the mark within 6.5 points. You hit 59.93. We've been talking about this area that of sustained selling in early February. Just remarkable. We touched the top of that area. It starts at 6,000. Look at the volume on this chart, okay? It is a remarkable amount of sustained volume. When you look at the fact that we were doing at least 1.9 million shares, that was the lowest day. 1.85 million on the 26th, but realistically, you were doing 2.5 million, right? Some of the biggest days out there. And this was not after Liberation Day, okay? This was leading up to it, of course, on some of the anticipated tariffs that were going into place. But then you look at the volume we're doing right now as we've just faded higher on fumes, right? This market just traded from a price point of 51.27 up to 6,000, okay? And that's taking after. Now, there was a lot going on, right? We had, whether it was the 90-day pause on April 9th, huge volume on these lows, but then you're talking about only doing 1.3 million, 954,000, right? The biggest day out there is 1.6 million. We did 2 to 2.5 million for 3 weeks straight, and that's the area we're coming into. So it's going to take some momentum to get through that wall of volume. And what happens on top of that? Now we have yield concerns. With deficit concerns, yield concerns, 30-year 5.1. I mean, 10-year, you know, pushing 4.6, and you're going to talk about how that's going to reverberate. And you see it in the small caps. The small caps, they're always open to duration, okay? As in they are exposed to it, right? Where they are short-term in the duration is what I talk about. They're going to need to roll over that debt, okay, and they're going to be the ones that are going to have to pay the higher yields that are coming due. Okay, you look at Apple, you look at Microsoft. No, they go out very long on their debt, right? They can raise very long-term debt numbers, basically at Treasury rates, just over it. When you look at that, because Apple making a loan is probably just as reliable as the Treasury at this point, especially. But nonetheless, when you're in the Russell, that's where you're seeing it get hit today. Those companies, the small caps, they don't have the ability to issue that long-term debt like the big tech companies do, okay? They're issuing shorter-term debt that they need to roll over. They're more prone to the volatility that comes with higher yields, and you're seeing the Russell down almost 3% right now. Talk about a move, man. All right, we check out some equities today. Target, some tough numbers pre-market. You spiked down to 90.55. And we're bouncing a bit, but nonetheless, Target, yeah, they miss on earnings, they pull their outlook, and they get some issues, down about 5% for Target. Lowe's started the session higher, but they give it up as well on their numbers. Lowe's down by 2%. You check out the daily on Lowe's. Yeah, nice little pullback. And, you know, the Target equity, the Target stock, the chart, that's a rough one, folks. You know, maybe we've made a base, but boy, we need some strength in this market. You know, maybe that's the floor. You got some nice volume, but that's the 90-day tariff pause volume. Okay, everything has huge volume at the lows there, and everything, though, is dramatically higher. Target can't even catch a bid from those lows. As we're pushing $93 right now, and you were as low as 87 when the market was falling apart. We jump over the VIX for some volatility premium right now. Back to a daily. And yeah, all things considered, pretty low volatility still in this market. S&P's down 1.5%, but from where we are, where we've been since March 26th. And look at that run-up we had when I talked about the volume in late February to March, right? It's interesting. Remember how much volume took place on those charts. I keep harping on it, but man, that is going to be a headwind for equities pushing above that level when you have that type of volume for a sustained level of selling before we really had the exacerbated Liberation Day, market freakout. But equities, we got a little bit of selling and risk off today with the S&Ps off by 1.6% right now. And yeah, we got 45 minutes left in trading. When you get this type of action, 45 minutes, we're going to have a wild finish to this market. We'll see. Down by 1.6%. All right, folks, stay tuned. We're coming back with Sean Edwards, Vice President, Institutional ETF Strategist with Direction. We're going to come back. We're going to talk some equities, some ETFs. Don't go away, folks. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Are you ready to take charge of your financial future?
TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait?